Now, as institutional interest in digital assets accelerates, the infrastructure is becoming just as important as the market itself. Copper began as an institutional custodian, but today its platform spans everything from prime brokerage to settlement solutions. I'm fortunate enough to be joined today by Simon Morgan, the CRO of Copper, to discuss how innovations like Clearloop are helping institutions navigate counterparty risk and what might happen with traditional finance and blockchain-based financial systems. Simon, thanks so much for joining us today.
Well, thank you for having me, Rachel. It's a pleasure to be here.
So you've obviously evolved, Copper has obviously evolved quite somewhat as an organization. You've moved away from simply custody to also offering settlement and various other parts of the infrastructure stack. Which parts of these are nice to have versus must-haves for an institution?
Yeah, absolutely. The first point I would make, just based on your intro, is we are not a prime broker and never will be. And I make that point on purpose because a lot of our clients are actually prime brokers. So we actually serve them. And we did make an announcement yesterday with one of the largest prime brokers in the space, FalconX, which we're very excited about. But to your point, Copper was born as a custodian, and really that is the starting point for any institution looking at a new asset class. But as anyone who works in the custody business understands, that it really is a foundational layer for you to build other services. I would categorize Copper today really as a market infrastructure network business, and that network being the Clearloop network. Now, what does the Clearloop network actually do in real simple terms? It connects custodians, and I say that with an S on the end on purpose. It's not only Copper on the network, we also have BitGo on the network, as the intention is to add lots more custodians. It connects custodians to trading venues, which today are in a crypto construct, so it's mainly the centralized crypto exchanges. And the network messages margin and settlement amounts between the two. That's effectively what it does.
And why is that so important in the digital asset space?
So we go on about this a lot, and it's boring to hark back to the events of 2022, but the FTX fallout was seismic for this industry, and it really exposed all the frailties that existed in market structure at the time, and it certainly wasn't fit for purpose for any institution. Clearly, it was actually already in operation at that point, and we had a couple of exchanges, including Deribit, already on the platform at that point. But what that meant was, at that time, institutions would have to pre-fund their exchange account, effectively taking explicit credit risk to those venues, which is not what is done in traditional finance. And then, of course, as we saw, if a particular venue goes bust, then all that money is lost. So clearly it was designed to mitigate that risk, whereby a client can hold their assets in safe custody, and then the network messages margin amounts and settlement amounts between the two, and then using the benefit of blockchain technology and our operational processes, we actually settle versus these exchanges very, very frequently. In some cases, every hour, 24 hours a day, 365 days a year. So it ends up meaning that clients, their risk exposure towards these venues is very, very small.
So let's talk a little bit, you mentioned there about how the settlement and the speed of settlement. How do you see these two, I mean, they're not purely separate anymore, but these worlds converging or colliding or evolving over time, the traditional finance, DeFi?
Absolutely, and it's happening, I think, a bit quicker than it was actually thought. Part of our big growth strategy actually is moving away from being just a crypto asset class, because anyone who's involved in this space and has to suffer the ups and downs of BTC prices understands how difficult it is to make money. But really, it's the underlying technology that matters. I mean, what we have is classic third-party margin seg, but it is just enhanced by the fact that collateral moves on blockchain rails. So part of our strategy is to grow that network of adding more custodians, and even by our own admission, when the real custodians turn up, and I mean the GSIB banks and the big custodial banks of the world, when they have big crypto and digital asset custody products, no one in the right mind is going to want to custody with Copper, and frankly, nor should they. Facing $1 trillion balance sheet is way more appealing than facing Copper. The reality is they're not there yet. They are coming, and we're engaging with them and ready for that. And in a similar vein, so our challenge is to add them to the network so they can give their clients the ability to trade on what is today these crypto venues. But also in the same vein, we've seen announcements in the CME and NASDAQ and the NYSE that they're all going to start 24/7 trading, which effectively means they're going to have to accept collateral on weekends and at night, which means they're going to have to use blockchain rails. And that's really what the Clinic network does. And that's what we're looking forward to.
And so let's talk a little bit about that then. So you mentioned the financial institutions moving into this space. How are you seeing that from a long-term perspective, like in terms of your business model and growth model?
We see it as a huge opportunity and almost a changing role of what we do. We do custody today, mainly because there aren't many alternatives. There are other, obviously, digital asset custodians in the space, and we're engaging with them. And as I say, BitGo is already on the network. They're a partner of ours, and we're engaging with the others too. But I think if everyone is honest with themselves, balance sheets matter, and that really does matter for a big client when they're choosing their custodian. Our edge and our value is in the network and the technology behind the network. So, part of my role really now is expanding that network to include all the big GSIB banks of the world, whether that's Standard Chartered, Citigroup, JP, et cetera, as well as those new trading venues, not new trading venues, but existing trading venues that are going to adopt blockchain infrastructure to make their worlds more efficient. That's really what we do. So very much we see them as partners and those potential acquirers in the future, as well as all the big market infrastructure of the businesses of the world. The DTCC has announced their big tokenization pilot, and others doing similar projects, and it all meshes together in this network business that we have.
Amazing. It will definitely be interesting to see as more institutions come into the space, what that looks like for integration and consolidation on a larger level. Well, thank you so much for joining us today, Simon. Pleasure to have you in as always.